Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we are going to look at two small cap pharmaceutical companies. Now, I know a lot of you guys have been asking me to go a little deep into stock specific videos. So today I'm going to do that. So we're going to take two different small cap pharma companies. Now, pharma companies are usually very difficult to handle. So that is why I'm going to try going as deep as possible. And number two, I've also made a very nice Word document for all of you guys. So after this video, I will share that Word document with all the details in the description below. Okay, so let's begin. Now, this report that I'm going to show you is very interesting. And in my team, I have a lot of people who are highly skilled, whether they're CFAs, FRMs. These are people who have upskilled themselves in the world of finance, and they've actually become very smart. And obviously, we hired them, and they also get hired by a lot of financial institutions across India, right? Now, I know a lot of you guys have been asking me the question that, Shashank, do you know any CFA program, any FRM certification, any training program? What do I do? So I'm going to show you something today. Now, there is a company called Zell Education. They are the number one institute in India for training people in finance and accounts, and they have global certifications mainly for their CFA and FRM certification training programs, right? Now, their CFA training program, you can start as early as the second year of graduation. So you have that good head start, and you can start preparing for that CFA Institute USA exam as well. And this will open your careers if you want to become a portfolio manager, you want to become an investment banker, and you get very good salaries up to 18 lakhs, whether it's JP Morgan, Goldman Sachs, or HSBC, right? Now, they also have an FRM training program, and here you can apply for this immediately after your 12th standard. Now, this prepares you for the FRM certification awarded by GARP, which is the Global Association of Risk Professionals, right? Now, again, this will give you a good insight into risk analyst roles, and that will again give you around 10 to 12 lakh LPA. RBI, HSBC, EY, these are the companies that actually come into this picture, right? Now, another thing that's good with Zell is that they also have this 100% placement assistance. They will help you with your placements. They also have an 85% passing rate. And you are also trained by industry experts, right? Who can coach the students to successfully pass these exams. And these are globally recognized certifications. So this is something that you should definitely check out. They also have immersion events and an alumni network, which connects you with professionals from various top firms. If you're interested in the world of finance and you want to make a promising career, you can definitely check out Zell Education. They're giving a free career counseling session. So you can actually go fill out this Google form in the description, and the team will reach out to you. Go and sit for that career counseling session and understand if you want to do something like this. It would be very useful for all of you guys. Okay, now the first company that we're going to look at is a company called Blue Jet Healthcare. Now, Blue Jet Healthcare was in the news for a very long period of time, because I don't know if you guys remember when this whole CDMO craze came into the picture. Blue Jet was one of those companies that started doing really well, right? Not just that, I think a lot of these brokerage houses like Jefferies and Goldman Sachs, they all came and said that Blue Jet is amazing. They all gave buy rating to Blue Jet, but what happened is they gave buy rating. The stock went to 1,000, and today, within a year, it has come down to 680 rupees, right? So it has actually taken a huge fall from when the supposed buy ratings were given, and 32% dip has happened in this company. Now, obviously, we will try to understand what is the reason that this dip has happened and what does this company actually do. So let's go into a deeper mode here, right? Now, if you look at the market cap of this company, 11,000 crores, P ratio is 32, which is okay, slightly okay. If you look at the revenue growth from a year to year standpoint, you can see a massive jump that has happened in this year from 740 crores to 1076 crores, right? If you look at the profit, again, a massive jump of 164 to 305. So we can see that a huge jump has happened just now, but before that, there was no jump at all, and everything was pretty much decent. Net worth of the company has also gone up very well, and 86% of this company is with promoters. It recently came out with an IPO as well. That also did really well. Retail and investors have 11. FIIs have 1.97%. And if you look at the fund names that are holding, two mutual funds, one is PGIM and one is UTI Smallcap. So this is basically a company. Now let's quickly look at the technical analysis of this before we deep dive into the fundamentals of this company, right? So if you look at this company from a technical standpoint, it entered into a very bad zone. Let me just go to the daily chart. Give me a second. Yeah. Look at this. So if you look at this company after the IPO, it created an IPO base, and after that IPO base over here, it kind of broke out at this point in July 2024. On 22nd July, it actually broke out at the 430 base. After that, it kind of went up, and this is where a lot of people came out with the buy ratings and said, this is amazing, you have to go for it. And it went and hit a peak of 1,000 and then came crashing down at 670, 650. But then the base of this company is also here, and it is sustaining this base over here, which is the 680 base. Now, if it rebounds from this base, then it will be a good sign for the company. If it breaks down from this base, then it starts going back to the 440 mark. Right now, coming to the company, what does it actually do? So Blue Jet Healthcare is basically a company in the pharma space. It is in the CDMO space. And now I know that CDMO, a lot of people have been talking about CDMO, which is contract development and manufacturing. Usually what these companies do is they are like outsourced manufacturers for big US companies, big pharma US companies there, right? And this company manufactures for number one for the global pharmaceutical industry, focusing on contrast media, which is used in X-rays, high intensity sweeteners, which is used in FMCG, and other pharmaceutical intermediaries, or also known as APIs, right? So the company mainly does these kind of three different things. That is what the company does. But we need to understand, why did that massive jump happen? Now, if I go deep into their investor presentation and just show you a little bit of the graphical representation of this company, this is what you will see. Look at this. This is the revenue operation growth trend from a year-on-year perspective. And you can see that the contrast media intermediates have gone up by 50%. Now, this is actually doing really well, because if you look at another company called Jubilant Ingrevia, they have also started doing really well, but they sell the machines for all these X-ray machines and radiology machines. But that is actually doing well in the last few years. And they predominantly sell to the US. The sweetener business is not doing great, but the pharma API intermediaries business, look at this. It's gone from 60 million, 602 million or 60 crores to 212 crores in just 1 year. And that has given a huge spike in everything. Spike in your EPS has gone up from 2.2 to 5.3. PAT margins have gone up from 23 to 25. Even though they've shown this quite aggressively, it's not that much. The margin's gone up by 2%, but that's great. EBITDA margin's gone up by 7%, which is insane. So you can see that majority of the growth from a year-on-year perspective has only come from the pharma intermediaries business. But then you'll ask me the question, Shashank, why? What happened? So let me explain that. Now, if you look at this document, this is a document that my entire team sitting in office has done. Very deep dive document. We do a lot of research on many different companies. So this is one of the document. I will share this document with you. Don't worry about that, right? Now, where is the growth coming? We just saw all of this. Let me check here. Let me go down. So look at the balance sheet analysis. No new equity issuance. Company remains debt free, which is a good sign. Significant growth in fixed assets. That means more capacity is coming into the company. That means more revenue can come in the future. Increase in inventory has also come, linked to operational growth. That means they're preparing for a very big bonanza year. That is what it looks like. Looking at the cash flow analysis, positive operating cash flow with net cash generation of 45 crores, which is again a good sign. 79 crores has gone into capex. If you look at the growth, they have focused on capacity expansion in contrast to media, pharma intermediaries, and sweeteners. So they're basically doing a proper overall capex. But where is the money coming from? That is where this part becomes the most important part, which is the key growth drivers. Now, if you look at the key growth drivers, pharma and APIs, this is the new growth engine, which is delivering 82% CAGR. Now, please don't look at this number and get overexcited, because our job is to be very unbiased when we look at companies. So this growth usually comes when it goes from a small base to a big base, right? Imagine you're running a company, you had 5-10 crores, and then suddenly you have a very good year and you make 100 crores. So that is why the CAGR looks very interesting, but it is not the case, because the stock price is not reflecting the same thing, right? Now, this segment exploded in the last 2 years, and now Blue Jet's fastest growing vertical. The jump came mainly because their key cardiovascular intermediate. So they had this intermediate that is there in the cardio space. They started doing this or supplying this for a very large pharmaceutical company, right? And this is a long-term contract. So when this becomes a long-term contract, they started getting insane amount of revenues, and this will continue for a few more years. That is why people are very bullish on this company. The company is also adding new complex pharma molecules. Now, this is very unique because very few people can actually start doing new molecules and pharma molecules. This is called NCEs. And this is also being done by another company in Hyderabad called Laurus Labs. So they are also doing something very similar here. And this is going to be a very strong growth driver in the future, because if you just look at all the CDMO companies, they're mostly like commodity plays, but there are some niche CDMO, specialty CDMO that are doing well. Not the generic one like Windlass. They are quite generic and standard, right? So now what is Blue Jet doing? Blue Jet is working on 20 high value opportunities in the CNS space mainly. And this is going to be used in the clinical and validation stages. Now they're also working on peptides. Now peptides is again very, very, very important. And it is also something that everyone is working on in the future. So if you look at this company, it is doing both NCEs, it is also doing peptides. So this is something that is working in their favor at this point. Now coming to their other business, which is the stable business that is growing at decent rate, which is the contrast media. Now this will continue to grow because the use of X-rays, MRI, CT, the dyes that are there, the chemical ingredients that are required, that will always be there, and this will start going up as well. Now company is also launching some two different new products here in FY26 that can actually bring the volumes back to the FY23 levels. Sweeteners not doing well because the segment was really hard because they had Chinese price dumping coming into the picture. Now see, all this is very important, and as you can see, the team has taken a lot of effort to make this document, highlight the important points so that you can save a lot of time, right? This will at least save 1 to 2 hours for you when you start watching this, or if you're tracking this company. So Chinese price dumping is coming into the picture. Volume bounced back, but this is going to be a problem. But if you look at it from an FMCG standpoint, yes, a lot of people are shifting to artificial sweeteners. They are moving away from refined sugar. So this can be a long-term thing, but nothing close to being what it can be with the growth rate that can come out, right? Compared to, let's say, the pharma business. Now they have 20 late stage molecules in development, and if even one of them works, then this company can explode, right? So that is basically what the advantage is. Blue Jet has 4x their capacity in 4 years. Now they're adding another big capacity in Andhra Pradesh. And if you look at it, most of these pharma companies are right now sitting in Andhra Pradesh, right? Because a lot of government help is coming into this. They're giving them free land and a lot of other things, right? Now, what is the problem? The biggest problem here is the high customer concentration. Because as you can see, that one giant pharma company that they're currently doing long-term contracts with, that is more than 50% of their entire business. And that is obviously horrible. And if you look at it, 75% of its revenue comes from just two customers. Now, this can also work in your favor, as you know that the revenue will come very well. But this can also go against you, right? Because if tomorrow the pharma company decides to say, you know what, Tata will go find another person, then this becomes a huge risk for this company. So this is something that you always need to look at. And orders come in bunches. It's not smooth. So they basically work on a make to order model, meaning the output depends directly on the customer demand. If the customer delays this output or delays the orders, then they're going to have another problem as well. Few molecule drive most growth. This is what I also told you, that even if one actually succeeds, then they will do really well. But even right now, most of the revenue is coming from that one cardiovascular API intermediate that they're working on. But let's see, the diversification is happening. So we don't know whether it'll work out or not. We will have to see in the future, right? But from a valuation standpoint, it looks okay. Nothing wrong with the valuation standpoint, but key customer risk is there. But a very, very, very interesting company to look at. Now, the second pharmaceutical company, this is a smaller company, very interesting. It's called Senores Pharma. Again, similar lines, not exactly similar, but this has been doing really well. Last 1 year, beaten the index, 18% returns. Last 3 years, also, it has been, it recently came out of an IPO, so it is doing really well. It broke the IPO base. So from a technical standpoint, it looks good. From a year-on-year revenue perspective, looks amazing. Don't you see that it has that similar growth trajectory that the other company had? Look at the profit growth, similar growth trajectory. Look at the net worth, similar. I'll tell you what this company also does, right? 40% is with retail, 45% with promoters, rest are with a lot of mutual funds. Now, coming to the deep dive of this company, let's go back here. Yeah. So again, here they work in two different departments. Okay. So let me split this up for you. They have one which is called the regulated markets, which is US. And then they have also, they are also operating in the emerging markets, which is Africa, LATAM, CIS, and SCA. But most of their business today, as of now, comes from the regulated markets, which is US. So basically, what they do is, again, they do formulations, API, that kind of things they do there. And they usually give it to a lot of these DEA, so drug abuse and substance abuse. So they make drugs for these markets, right? And they do it for US. So their major clients are the government of US itself. Now, very weird that they don't directly take the orders from the government. That is what we realized when we went deep into their con call earnings. So if I show you their con call earnings here, a large part of our product portfolio has the potential to cater to government contracts and controlled substance category. Now, another very weird thing here is they don't get the contracts directly. The government gives it to someone locally and they outsource it to these guys. And that is how they make money. But the good thing is these are long-term government contracts. And we also did a deep dive into the company. We did a deep dive into the substance abuse category in US. So the more people in US are consuming drugs, there are a lot of this homelessness situation and all of that. This company starts doing well. And we have seen that the substance control budget has constantly gone up in US over the last 10 years, and it is going to continue going up as well. So the more and more people get screwed up with drugs, this company comes to save them. That is the logic here, right? Now, if you look at this US CDMO business, they're growing at 7.7%. US accounts of 40 to 45% of the global CDMO market, and this is basically how they're doing. Right now, they're still trying to grow in the emerging markets, but right now they're very big here. Now, look at the business segment here. Regulated markets, US, Canada, UK is 90 crores, which is 65% of their business and growing at 69% year on year. Now, if you look at their other own products, they're coming, but that is also slowly coming into the picture as well, right? Under regulated markets, their own A&D is 62 and CDMO is 28. So under regulated markets, their own products are 62 crores right now, which is higher margin, and they have 15 to 16 more launches coming in FY26. Looking at emerging markets, 29 crores. As I said, this is very small, but the margin here is very bad. So look at the margin here. In US, they have 35% margin, but in emerging markets, they only have 6. So basically, what growth trigger they're talking about right now is that, boss, US is doing well. That is going to grow. We have long-term contracts, but it's not going to explode. So now we are entering Africa, Latin America. We'll have 6% margin today, but we are planning to explode this, put sales teams over there, and we want to increase that 6% margin to 15% margin. Right now, it is creating a problem, but over time, they will start growing it quite aggressively. So again, from an overall standpoint, it looks very good. They have given very aggressive guidelines. They have said that they will grow at 50% CAGR and PAT will grow at 100% CAGR. Now, such things usually scare me also, because even I would get really scared if somebody guides 50% top line and 100% bottom line, mainly because most of your premium gets absorbed into this picture itself, right? So that is my biggest problem. See, the CAGR for US business is 20-25%. And the CAGR for the outside US business is something that they're going very aggressive on. And if you look at the fundamentals of this company, as I showed you, the P ratio is at 48. So some of it has been absorbed into this, but it is only a 3,200 crore market cap company. And that is why this company has a lot of potential to do well. But if you ask me, I would definitely put it on my watch list, because it's a wait and watch. The management has been performing really well in the past, consistently performing well in the past. And if they keep performing this, the alpha will keep getting made in this kind of a company, right? As you can see, the regulated markets over emerging markets takes over most of their business here. So this is something we need to track. It is a game only and only on the fund, management and how they actually perform. But definitely 3,000 crores is nothing. You should keep a track of this. And again, don't forget to book your free counseling session with Zell Education, as we mentioned at the start. The link is in the description. Until next time, I hope you guys enjoyed this deep dive, and I'm going to share this document with you as well, so that all of you guys learn and understand a little bit more about these companies. And if you like these kind of videos, let me know in the comments. I will make more such deep dive research documents and then share it with you guys as well. Again, thank you guys. Take care. See you guys. Bye-bye.